Yo, 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 what's going on, ladies and gentlemen? Welcome to the trickery of Bitcoin. Well, what do we mean by trickery of Bitcoin? Pretty simple, ladies and gentlemen. Mr. Market Maker sure took us all for a ride today, initiating the move to the downside on the results of the CPI showing an increase on the inflation. We now know that the Fed's going to mean serious business when it comes to increasing the interest rate hikes. We already had an increase in the rate hike for the Canadian dollar, which absolutely floored dollar CAD. But let's just look at the logic. Has today been set up for us to understand that everything is now going to start trading lower? Too many concentrated orders inside of this zone, ladies and gentlemen, but the irony of today was this. We saw exactly the same thing happen in the Bookmap like we did not so long ago. Let me show you something. In today's live stream, ladies and gentlemen, we were talking about the idea that this 18,900 was showing a lot of interest. 1,491 Bitcoin, and then shortly below that is 1,065 Bitcoin. These are orders that were coming into the chart, ladies and gentlemen. We had already had a massive move to the downside, and it would be so fitting to assume that price was going to make its way to fill those orders. Now, the darker the order shows, the more commitment there is by specific traders opening positions. Now, we're talking about traders, whether it be commercial funds, hedge funds, banks, you name it, whales, market makers, algorithms, you name it. They're all placing their orders. And you can see how price changes all the time on the Bookmap, ladies and gentlemen. You can see how orders are being opened and closed. Now, these orders over here are orders that haven't been filled yet. Now, before we continue into the Bookmap itself, the Bookmap is a place of auction. It shows you the relationship between where the buyer and seller is present. And Mr. Market Maker works behind the scenes of this order book because he has to make sure that for every buyer there is a seller. And he has to be the seller when there is a buyer. He has to be the buyer when there is a seller. See the Market Maker as the guy who provides the float for a business that opens and conducts its every day. If you have a cash register, or a till, as they call it in the UK, right? Before you start your business, you need to have a float. Because if someone comes in and gives you a $20 note or a £20 note, and they're paying for something that's only £3, then you're going to have the change to give them the difference. The market maker is exactly the same. He provides the float. Now, without the retail trader, the market maker won't need to exist. He'll just be trading and setting up price against banks, hedge funds, and institutional traders. That is it. It was only when they started to bring in the idea of a retail market where Mr. Market Maker now has a bigger pool of liquidity to play with. Not just the high net worth individuals, the institutional traders, and the hedge funds. He's now got everyone involved in the game. Now, why am I talking about this certain area here? Because not so long ago, ladies and gentlemen, we were talking about exactly the same area, but when price was all the way up the highs. We were anticipating that they were going to come and bring price back down to here. And we were saying in the live stream today, which is Bitcoin will feel the pressure from the Fed, dollar is king. All right? Go watch that stream. We were talking about the idea, if this doesn't get filled, Bitcoin is likely to return back up in the New York session. If they don't fill it, then it will end up being a trick, an advert to get traders to start opening shorts because they missed out on the move to the downside. And we saw that happen in the New York session, ladies and gentlemen. Let's go and have a look at that. They came in with this green vector candle right here. They spiked price lower, hit the range daily low yet again, and then they shifted back out and fully recovered the red vector candle. Here is the example of what I was talking about in relation to the zone that we're talking about over here in this video, right here. So, not so long ago, Bitcoin, when it was at the 40K mark, ladies and gentlemen, go back. Here we are. At the 40K zone, we had an influx of liquidity up here. And this was during a live stream. So go into the 13th of April, all right? And this was during a live stream. And we were witnessing price making its way up. And it wasn't taking the liquidity. It just wasn't doing it. Why? It was there for them to take. Look, there was clearly liquidation points. Look, 322,000, 30,000, 49,000, 7,600, and $92,000 worth of liquidations. 271,000 there, 379,000 right there. It was clear that there was liquidity to the upside to shake out the shorts. But they weren't sending price in that direction. Look down here, there was nothing. These orders, as much as they were advertising commitment from traders, they ended up pulling it straight back down. Look at that, and look at that. Look at how all that liquidity disappeared. Look at this bar right here. You see that? Now look at this one right here. Nothing there. They forced the traders to mark down lower. Now, sometimes in the Bookmap, there is something where if you start seeing diagonal orders coming into the Bookmap, where it usually looks like a bit of a triangle into price, it's what they call ignition algo, which is something that the algorithm does to force price into a zone. Could that have been the case with this play, maybe? Was it happening beforehand? The only thing that you can get from understanding this relationship between where orders were being placed and not taken to looking at it and then saying, well, how could I have understood that? It's all down to focusing on the price action. Okay? That's what's important. See, if you look at the Bookmap right now, ladies and gentlemen, you will see, if we zoom out, you can see that 18,880 is still present. Look at that zone. That liquidity is still there for the taking. They have come into areas where they could transact frequently in and get traders to commit. Where's the liquidity now? We don't see anything, do we? It's dribs and drabs, as they say. Retail traders, oh, I need to get into Bitcoin, man. I need to see it's pumped, Bitcoin's moving up. But that liquidity is staying stagnant right down there. 1,200 Bitcoin orders at 18,880. So let's look at the logic. If Mr. Market Maker is going to get his shorts filled at the highest possible point, what do you think he's going to want to do? He's going to want to try and encourage as many traders as possible to commit longs up here. He's going to want to make sure that those longs that are committing up here are placing liquidation points all the way down here. Because what happens when you actually hit a liquidation point for a long? It sells. And what happens when you trigger shorts and sell shorts? You buy to cover. So when Mr. Market Maker rolls price all the way down towards this zone on the basis that price action actually continues lower and it comes towards this area and this liquidity is present in the chart, he would have been able to set up against every single liquidation point of longs that has been placed in this side of this zone, and he'll be hitting each of those liquidation points and filling his longs at the same time. And then he'll be then running more shorts to the downside, triggering these orders to only reverse it back up again. Unfortunately, ladies and gentlemen, you are playing in the game of zero sum. One man's fun is another's hell, and this is the name of the game. Now, going into Bitcoin's current price action, rejection of the 50 EMA. Daily open sees a breakdown and it comes straight back up. Looking at other assets across the board, ladies and gentlemen, is the dollar dominance still present? You know it, ladies and gentlemen. Dollar dominance is still present. They've simply taken some profit on the index and now they've shifted out. Euro USD comes down to parity, looking like it's going to make its way back down to it again. Oil at the same token sees a bit of a recovery, but throughout all of today's price action, oil really didn't do much, which is a sign that the traders are now maybe seeking oil and commodities for safety. Gold on the same token, ladies and gentlemen, initiates the move up. News is bad for the dollar. Gold goes up. Then now look what the story is. Massive imbalance in the chart. Today, guys, was the stop hunt rise. If you remember the drawing that I do, I keep calling it artwork. I don't know why. But if we remember, this is the US Brinks box, and this is the actual zones that they can actually initiate their moves from. What are you looking for? Well, you're looking to determine where price is coming from. So if price is coming from a rise to the upside, you are looking for Brinks to form at the highest range. You would naturally be expecting a stop hunt to happen to the upside for them to come back down again. Then when you're looking at price coming to the downside, you see price going up and down, and then you come down to a low. You expect a stop hunt to appear inside of this zone. Stop hunt low, rise. That's exactly what you had today, ladies and gentlemen. Where's the Brinks box? It's right here. What do you see? Stop hunt low, rise, retrace, continuation to the upside, full recovery of the red vector candle. Do we need to say anything else, ladies and gentlemen? Question is, where do we see Bitcoin going now? That 20K zone was an opportunity for them to quickly build up more shorts and attack the range. They've done it again inside of this zone. Do we have the problem of Bitcoin going lower? Well, all we need to do, ladies and gentlemen, is paying attention to the previous vector candles in the zone. Moving forward, ladies and gentlemen, tomorrow is a very important day again. Why? Because we have the PPI coming out and we have unemployment claims, which is going to set the stage for exactly what to expect with the retail sales tomorrow. We have the Empire State Manufacturing Index coming out, and we do have Bullard speaking as well. So we're going to have an influx of information coming out on Friday. Will we see the same behavior as we saw today? It all depends on the consumer sentiment, because if the consumer sentiment comes in negatively, that tells us people ain't spending money and people aren't feeling good about the overall situation. Come on. It's the recession, it's inflation. And look, I know some people believe that recession is here already. The yield has inverted, which gives us the sign that things could be in a recession. Until they say we are in a recession, then we ain't there yet. Everything may be screaming for recession, but until they declare it, we're not there yet. Why? Because human behavior never changes until they're told. Until we are told by the top boys that recession is here, then people will be reacting accordingly. But when we focus on these news announcements, we kind of get the idea of whether recession is here practically or mentally in people's minds. That's going into another conversation, ladies and gentlemen. Something for a podcast, maybe. So, moving into tonight, we have Asia. Asia will be reacting to tonight's price action and today's price action and the CPI results. All right. So as always, be prepared for Tokyo and Hong Kong. Look at what they did in last night's Tokyo and Hong Kong session. Go back in the chart for the start of the week and understand what the narrative is in the Tokyo and Hong Kong session. Have a look at these green boxes right here. Understand what the relationship is like. If the US has now marked price down lower, or the UK session marked price down lower and the US sent it back up again, same into the same zone that the UK brought it up in the same session. It's like the UK session was the one that done the dirty today, ladies and gentlemen, and set everything up. This is something that we need to take into consideration. So, ladies and gentlemen, I hope this video has served you in some way, shape, or form. If you are new to the channel, be sure to like and subscribe, and I'll be checking in with you tomorrow to bring in the final trading day in the channel. Why? Because it's the midweek reversal. Will we get at least a reversal back up? We know there's inflation. We know the Fed's going to be aggressive. The market, in principle, would need to price it all in now. If we don't get a drop tonight, then we may get an upside reversal in the sense where we see Asia continue price higher for them to form an M formation to drop down. If Asia decides to mark price even lower and aggressively lower, then we would be able to exploit an opportunity for Bitcoin to reverse back up. And don't get it twisted, guys. When we say midweek reversal, we don't say Bitcoin's going to go to 100K from this week on Thursday. No. We're talking about taking advantage of price to the downside, seeing these vector candles and exploiting them. You see, the system, the hybrid system says that when you see a red vector candle like this and it breaks down aggressively, you are looking for what we call the V-shaped play. All right? The V-shaped play is one of the master classes in the Patreon, ladies and gentlemen. If you want to check that out, head over to patreon.com. But the V-shaped play in principle is taking advantage of the volatility of price, taking advantage of the retail trader going short. This system is designed to make you think counterintuitively. When prices are dropping, what do you see across Twitter? Bitcoin collapsing, Bitcoin dropping. When it's rising, Bitcoin to the moon. You can only buy when someone sells, and you can only sell when someone buys. Mad love and respect to you, ladies and gentlemen. Take care of yourselves. Peace.